Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone, and welcome to another episode of the Smart Property Investment Show. Maya here with you today, the editor of Smart Property Investment. So obviously it's been quite crazy in the property market as sort of usual. We're getting used to these stories of, exponential growth and just auctions performing so well despite even, lockdowns like we have in Sydney at the moment, unfortunately. But today with us, we've got Colin Rice. So Colin Rice is here to share his investment journey. He's also a mortgage broker. Colin, welcome to the show.
Oh, hi, Maya. Good morning. How are you? Greetings from Perth.
Good. How's Perth doing at the moment? You guys had a bit of a brief lockdown, 3-day lockdown, didn't you, last week or so?
Yeah, we did. It's not too strict over here in the Wild West. I think the isolation for once is in our favour. So there hasn't been that many cases. So it's pretty much life as normal. Sometimes you just got to keep up to date with the news and whether you've got to wear a mask indoors or outdoors or on public transport, that sort of thing. But pretty much life is normal over here, I think. That's what it feels like to me anyway.
Oh, that's good. Well, you guys would arguably, you'd sort of be the most isolated city in the world at the moment, wouldn't you?
Well, I think that's an actual fact. I think we're the most isolated capital city in the world. I learnt that fact when I was a small boy for some reason. So it's working to our advantage. So
definitely true at the moment.
Nice, good here. It's a bit wintry and whatnot, but that's what happens when winter comes around. Exactly.
But the sun is shining from what I can see, so that's good.
A little bit, yeah. Coming through the clouds, just sitting. I'm on school holidays looking after my kids.
Oh,
so
that's nice. Yeah.
I've told them to be quiet and I'll get them something. We'll get some McDonald's afterwards if they stay quiet. Yeah, but so far, so good. One of them might bust in, but that's all right. We can
that's okay. So, Colin, tell me, properties are going pretty mad at the moment. How does it feel to be a property investor and going through sort of the past 12 months and seeing, price growth like we've never probably seen before? What's it been like for you? Has it been sort of an uncertain period or have you felt pretty confident?
In my personal life, it's been a little bit uncertain, just going through a divorce settlement, and that's quite an interesting experience in and of itself. That's probably for a different podcast. So, no, me personally, I've been okay. I've had a couple of years off. I've still been, had my finger on the pulse as far as my mortgage broking business is concerned. I took a couple of years off just to focus on myself, get myself right, and now I'm back in full force. The Perth market has been going pretty good over the last, particularly 6 to 12 months. We were in the doldrums for a long time and things were pretty much staying on par, or some places were even going back in value. Across the board now, Perth is seeing a little bit of a mini boom. How sustainable it's anyone's guess. I got a letter from a real estate agent the other day, and he believes that people are going to start taking advantage of the price rises that have taken place, and then listings will increase, and then therefore that will ease some pressure on the prices. Whether that will happen or not, time will tell.
Exactly.
Things are going good in Perth, and it seems like it's our time, but it seems like the whole nation's going pretty strong, which is pretty unusual because it normally moves in sectors. Like you'll get one part of the nation will move, then another will move, and those patterns now don't seem to be as distinct as they once used to be. So we're living in interesting times, and even talk of 0% interest rates. So
yeah, exactly. I was just actually writing an article about that with APRA sort of asking the banks to prepare for zero or negative territory by sort of April next year, which is quite interesting. But speaking about Perth, we have sort of been writing a lot about Perth as well. And it does seem like, you guys are sort of seeing supply is very, very low, which is obviously creating some problems, and growth is just going through the roof. So you must be happy with your properties though. I mean, are you sort of looking at all at selling any of your properties, given that sort of they would have grown in price quite substantially?
I'm hoping not to sell because a mentor of mine from years back had some properties at the time, and he was actually a mortgage broker and a mentor of mine.
Mm.
And he was one of the reasons I got interested in mortgage broking. And I asked him, should I sell this property or these properties? And his answer was, is money an issue? In other words, is cash flow an issue? And I said,
You need the
no,
money,
it's
yeah.
not. He said, no, it's not. I said, no, it's not. And he said, well, don't sell then. So I'm a big believer in, unless you really have to sell, then you don't sell. In saying that, I may just have to sell possibly one just to cash out and sort of things out with personal issues in my life and a divorce settlement. I'm hoping, though, I've asked for a bit of time to raise some cash because I don't want to sell because with talks of inflation possibly getting a little higher or a lot higher, if you've got cash, then that decreases in value. But if you have assets through property and other things like that, it's going to increase in value. So I'm going to do my best to raise the necessary funds in other ways and hold on to as many properties and as many assets as I can over this time.
That's a good plan to have. I'd definitely be a really bad property investor because if I was in your shoes, I'd just sell them all now.
Yeah, I know.
So that's totally not an investment tactic anyone should follow.
See, I've made that mistake, quote unquote, in the past. Although I've probably always made money out of property. In saying that, I just did a development where I bought a place and then I built another place at the back and probably ended up breaking even or probably a loss just because of the timing and certain situations and circumstances, which I won't go into, dealing with tenants and whatnot, came into play. However, now I think it's getting back to a break-even profit scenario. So it would have been one of the first times I've ever lost money on property. And I'm not saying I'm some sort of genius. I do have some knowledge of how the markets work. But with property, a lot of the time people will brag they're so smart, but it's a combination of luck and calculated risk. It is. So in the past, when I've done well, it's been luck and calculated risk, but you've got to be in the game to win. And exactly. So I still think there is some good value in property. Just the strategies now are going to be a little bit different rather than just the old buy and hold, which seems to be still working, surprisingly. You can look at being creative and increasing value through, splitting the land or developing. So basically, the more problems you solve with property, the more money you make, in theory.
Yeah.
So... yeah.
That's true. And just rewinding the clock a little bit, Colin, how did you sort of get your start in property? When did you start purchasing investment properties? Was that sort of did it start off as a hobby or was that sort of a tactic to increase your wealth sort of as you got older?
The first property I bought was in the year 2000 in a little suburb called Dianella. It was just a one-bedroom flat. I think I paid $52,000 for it back in 2000.
Oh, wow. Yeah.
And I ended up living there. I got it for the first homeowners grant, and it was around the corner I was staying. I was only pretty young at the moment. I've been travelling around Australia, came back, stayed with my mum as you do. Yeah. That sort of wore off after a few months. I wanted to get my own place and was always interested in creating wealth. And I did a seminar in early 2000 as well with a local guy in Perth. He's quite switched on with property, and he taught me a lot. And then purchased that property using the first homeowners grant. I owned it for 6 years. I lived there for 3 and I was a strata manager as well. So I learned how to manage the complex, collect all the stratas, organise all the contractors and the trades. And that just happened to fall in my lap because I was at an AGM. The lady doing it said, I don't want to do it anymore. I put my hand up cheekily thinking they wouldn't take me serious. And the next minute I'd been made the strata manager. Yeah. So just she rocked up one Saturday, dumped the file and a shoebox on my desk and said, there you go, any questions, let me know. So I just worked my way through it and worked it out, learned a lot through that. So that 6 years later, that property was worth $200,000. So Perth back in that period literally quadrupled. So I don't think we'll see that sort of growth again, but that's how I started. And then I had a managed fund on the side as well. That did well. Then I wanted to buy another property. This is when I ended up meeting my wife at the time, got married. We were living in a kind of like this unique situation where I had this whole property to myself and I was essentially just renting the room and looking it up for someone. We lived there for a while. And my plan actually was to buy heaps and heaps of properties, but she, being a woman, wanted to have her nest, and I thought fair enough. So then we bought another property after that, and that doubled in value as well.
Oh, wow.
And then I went on to buy another block of land, all in the same area, funnily enough, because it was going quite well and it was just what I was familiar with. Bought another property around the corner where it was a just a subdivision, but you could put on 2 properties. It's an R40 zoning. I'm not sure the zonings in eastern states are different. So put a couple of properties on there. I built one for us and then one for my mother-in-law as well. So project managed that and just cut my teeth on my first development.
Oh, wow.
I've done a couple more since then, just small-scale developments. And, did all right out of that. And then, just kept going and purchasing properties and selling more than I should have. I did a back of an envelope calculation one day and I thought I could have actually afforded to keep all of them. So it's a real mindset thing. And I would have been a lot better off equity-wise, but that's okay. You live and learn, and I'm doing well. And I've got future plans to, once everything settles with what's going on in my personal life, I want to start using my SMSF to purchase property as well. So looking at maybe getting a commercial premises where I can work out of, maybe sublet like a little 2-bedroom office suite and then sublet out the office suite, help pay it off. And also looking at maybe getting a dual or triple key. Just come across some builders and a real estate agent and a land sales guy. They've got this little unique concept going that they believe is feasible. So just looking at that and generating cash flow through that. So look, we're in a unique place. You can get properties in Perth that are increasing in value and also cash flow positive or cash flow neutral. So the last time that happened was back in the early 2000s. So
exactly.
There's still plenty of opportunity out there. You just got to educate yourself, obviously, and know the pros and cons and get a good mentor.
Yeah, exactly. And Colin, we're just going to take a very quick break and we're going to be back to hear more about your property journey.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
And we're back. Welcome back to the show, everyone. So I've got Colin Rice with me here today. So he's a pretty seasoned sort of a property investor who's actually sort of looking into going into commercial property now. So Colin, tell me, you said that I think your first property was back in 2000, so some 21 years ago. Did you sort of, throughout the process of buying properties, you mentioned a mentor, or did you go with buyer's agents, or was that something that you did on your own, the research, and how did you go about sort of picking these properties?
I've done both. So I have used buyer's agents and I have done them myself. Look, there are, like any professions, there's 60% average, 20% dangerous, and 20% are excellent. So I probably got an average one in my first buyer's agent's experience. That's okay. I mean, like I say, it's done all right now. I just thought I expected a lot more from the experience than what I actually got. They were just protecting themselves as well from a legal perspective too. So doing the research, look, a lot of it, like I say, was just calculate a risk. Like, can I afford this mortgage? And is this property okay? And you get your inspections done and make sure it's a sound property. And really, when I look back, that was probably the extent of my research and just a combination of calculator risk and luck. Yeah. To be honest, and if most property investors are honest, that's usually the case. But you have to eliminate luck, and there's ways to do that. And you learn from your mistakes, unfortunately.
Exactly. Yeah.
So that's how life is.
Yeah. Do you have a property spreadsheet, like a Phil's trusty property spreadsheet? Do you sort of keep track of everything, or how do you stay on top? And how many properties is it in total now?
Right.
Between you and your wife?
I rely on my accountant a lot, and I pay him quite well.
Yeah.
So I just send him I have separate bank accounts, and I've got about 4 or 5 different cards. So I will use, depending on what I'm purchasing, I will use that. So essentially my bank accounts are my offset accounts, are my transactional records, and then I just send it off to the accountant. I probably should be doing a spreadsheet and checking that getting all the deductions in place. As far as how many properties have I got now, I've had up to probably over the years, I've probably bought and sold about, since 2000, I'd say about 12 properties. I did held quite a few, but I sold some just to cash in on the last property run that we had back in, I think it's 2012, 2013. So I've got 5 left now, which probably 2, one will go to my ex-wife, family home, so her and the children have got a stable financial future, which is important to me. and then I might have to sell one. So I'll be left with 3. That's okay. I'm counting my blessings and I'm walking away with that asset base and hopefully an SMSF fund and my business and 3 properties. So if I come away with that out of a divorce settlement, that's a good foundation to rebuild again. And I've got a 5-year plan. I just turned 50 last May, so I've got a 5-year plan to basically get back to the position I was in or better within 5 years, and making the right moves and calculating the risks and mitigating the risks and a bit of luck thrown in there. I'm probably going to do okay. So the next moves for me is to look at buying a commercial office suite that I can work from and then sublet that as well.
Yeah.
So you essentially rent it off yourself. You rent it off, you pay rent into your SMSF, and then if you sublet it, the rent goes in there and you can make contributions. So you could buy a property for around about a little office suite, not too far from the CBD, for around about 300K mark, and you could probably pay it off in, conservatively speaking, 10 years through the SMSF. And then once you paid it off, it's tax-free. Once it goes from your Bear Trust, which is how SMS is set up, back into your SMSF fund. And then also looking at possibly getting a dual key or a triple key as well as my next move. So obviously I want capital growth, and I think that is the most important factor, but I want cash flow as well. So fortunately the rents in Perth have gone up about 15 to 20% in the last 6 months. So that definitely helps as well. Slightly increases your borrowing capacity. Like I say, I've been on a break for 2 years, so I'm building the business back up. However, you can borrow through SMSF without taking into the rest of your other situations. So that's why I'm going to go that route, and then, just see where I'm at and then consolidate, and then also want to look into other investment vehicles as well, like shares. And my girlfriend's actually looking into currency trading as well, and she's doing okay out of that. So once you know what's up, you can educate me and I'll jump in as well. So she's sort of the guinea pig on that now. But she's doing okay.
Smart. So tell me, is this your first time with this commercial property that you're looking at leveraging your SMSF? Or
Yes, it is.
It is. And tell me about the process. Is it something that you would recommend to others buying property through SMSF? Is it something that you sort of, is it quite sort of simple and straightforward, or what would you sort of say?
Look, if you know what you're doing, you have the right team in place, yes, it's pretty simple and straightforward. So you would have to actually just, with commercial property, it comes down to the yield as well, and capital growth is a bit of a bonus. You will get some capital growth, but it's primarily the yield with commercial property, and with residential, it's primarily capital growth for most people anyway. So, the process is quite simple. The key is to build a team. So you need a mortgage broker, you need an accountant, you need a financial planner, and potentially a property consultant. Sometimes mortgage brokers offer that service as well. I'm just careful about recommending what people do. I just present options to people, and then people have to do their own due diligence, because I'm only licensed to give credit advice. I can't give financial planning advice.
Exactly, yeah.
So I'll have a team in place where I'll send people to the appropriate person at the right time. So look, it can be a bit complicated, it can be a bit fiddly, because there are trusts to be set up, and you have to apply by the SIS Act, Superannuation Act, which is very strict, and there's penalties in place for that. However, if you've got a good accountant and a good auditor, then that's all pretty sweet.
Okay.
I mean, for a lot of people say that an SMSF is very expensive to run. Mine's all up fees are about 3K a year. So I don't think that's very expensive because of the flexibility that it gives you and the tax advantages as well through using an SMSF. A lot of people have shied away from it. There seems to be a bit more interest in it now. So that's something that I'm going to be not pushing, but something I'm going to be encouraging people to investigate further, is using their SMSF. So
yeah, I know that people sort of steer away from SMSFs because they think it's way too much hard work, whereas, super fund that looks after everything for you. Most of us don't ever check our super funds, which is not the right approach either. But with an SMSF, would you say that it has, like, how much time does it a month maybe take away from you in terms of like managing?
Well, probably total time a year for my SMSF is just reviewing the tax returns that the accountant's done and paying the accountant's fee. So total time, really, because I'm outsourcing and getting other people to do it, which you're going to have to do anyway with an SMSF. It's just a complicated area that I'll just stay out of. So really, a few hours a year to actually run my SMSF, because I'm getting other people to run it. So at the moment, it's just in LICs and ETFs, just parked there for the moment. Once I can hopefully walk away with that SMSF then I'll start to work it.
Yeah.
So if you get the right people on your side and doing the work, that's you can't do it anyway, so you have to engage professionals. It's not a lot of time
Not that much
at all,
yeah.
really. No.
Yeah. Oh, that's pretty good to know. And in terms of commercial property, what made you sort of go down that road? I know that obviously commercial property is more expensive, but it's also higher yields and sort of, and that's where some of our experts say that's where sort of the future is. If you want to make good money, you have to go into commercial property. Residential may not be enough unless you have, a whole bunch of residential properties. But tell me how you sort of made that decision to do that and branch out into commercial, and is that something that you sort of plan to pursue as well in the future, more commercial properties? Or
the reason I went that way is because I'm working out of a colleague's office. He's got his own mortgage broking business, and I've just rented some desk space. So I just thought, well, this money that I'm paying to sublet this office here, I could be doing the same thing myself. And I've ran the numbers, and like I say, you could conservatively pay it off, within 5 years, even if you pushed it hard, because you can contribute $25,000 a year, and that can help reduce the debt and also the rental income coming in from yourself. Because with commercial property in an SMSF, you can actually run your business from there and rent it essentially off your SMSF fund. Whereas residential, you cannot do that. You cannot live in the property. You can't have anything to do with the property. It's at arm's length. So that's one of the key things. So a lot of people will be running a business out of a premises, and it could be worthwhile looking at either purchasing that premises if it comes up for sale, or relocating and buying another premise. Because once the property's paid off, then it's transferred from what's called a bear trust. So the SMS doesn't actually own it. The bear trust owns it, and the bank doesn't own it. It's locked in this bear trust. Once that's paid off, then that can be transferred into your self-managed super fund proper. And then that rent at the current legislation is tax-free. So it's a really good prospect, I think, or a good sound financial plan for my retirement, which will, not that I'm ever going to retire, but you know what I mean? Just get to that point where, as you get older, you're going to need a lot more money for health reasons, for lifestyle, that sort of thing. So it's just planning for the future, because I know it's going to come.
Exactly.
Yeah, and I want it to be a good one and a comfortable one. And money isn't everything, but it buys options, and it buys time, and it creates options. So it's just a tool to do things with your life that you otherwise wouldn't normally do if you didn't have money. And people might underestimate what is possible. So it's worth having a chat. Someone who might be able to open your eyes to what's possible, because there's a lot of things that people can do, even if they're just like, they think they're just average people. There's, they might have 200,000 equity in their property, and they might be able to buy a residential property or even a commercial property and create a cash flow and use that money to pay down their owner-occupied debt, for example.
Yeah, it's a good sort of wealth pool to leave to your kids as well one day. So property, it's never sort of, like you said, it's never going to lose in value. Property is always going to be there. It's a tangible asset, that you can see and touch, as opposed to things like shares and Bitcoin and things like that. But don't you think, as sort of for your kids' future as well, it's a good thing to pass down?
Definitely. Part of my plan is to build a legacy, a generational legacy. So that's been upset a little bit, but that's life. You just have to cop it on the chin, roll all the punches, and come up with new strategies, which is what I've done. So
that's good.
That's called being in business, the business of life. So. Yeah.
And especially now we're sort of seeing, you said back in 2000 you were sort of able to purchase your first property quite young for $50,000. At the moment, you can't even, that's not even enough for a deposit in, say, Sydney. So it's quite sort of hard for young people to get into property. So it's always good for those people that do have that help from their parents who have a few properties around. It makes it sort of much easier to enter the game. And you never know, with Perth growing as it is currently, it might be the same situation there in a few years' time for young people.
Yeah, the bank of mum and dad, hey?
The bank of mum and dad. Well, it's not our fault.
No, I don't mind if a parent's in a place to help a child out, and there's conditions around that, or it's not just like a charity gift or anything like that. So I think it's a great thing. If you can help your children out, there's nothing wrong with that, as long as they're doing the right thing and not abusing that privilege that you're offering to them. And I've seen a lot of parents help their children out by offering their properties as a guarantor or gifting them some money, and clients of mine, and they've gone on to do fine. They've done really well, and now they're getting some growth. So maybe the parents will get some money back directly or indirectly that way. So
exactly.
So it's definitely important, I think, to consider break that, because one of my goals was to break the poverty curse, I suppose, or the lack of abundance curse. So yeah, I've done that with
Doing
myself,
well.
and then I want to make sure my children understand, because I've got 5 children and they're still relatively young, 14 and under. So I want to give them the opportunity to, have an abundance mindset and to create wealth rather than just see money as something that you spend. See money as a tool, as something that you can multiply and make your life better and make those around you's life better. Money's not everything; it's just a tool, but it definitely helps. We need it.
Unfortunately, we do, don't we? But we're just going to take another quick break, Colin, and we'll be back in a second.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
And we're back. So today with us, we've got Colin Rice, property investor. So Colin is moving from owning residential property to sort of switching a little bit into the commercial space. So tell me first of all about your residential properties. Are they sort of all based in Perth, or have you sort of been, buying outside of WA?
All in Perth at the moment, although I do have clients that purchase all over Australia. They don't necessarily purchase where they live. I don't have an issue with that. I probably did in the past, but that, like I say, that's just a mindset thing, because often the markets do move at different times, and then you can take advantage of that as well. So I've got clients that are based in Perth that have bought properties in Brisbane, Tasmania, New South Wales. I've got clients even from overseas that have bought properties, sight unseen in Australia. So you don't necessarily have to stick to where you live. It's often a good place to start just to get yourself comfortable. Definitely is something that you can make work, like I say, because the property markets usually move at different times. But it seems like all of Australia is in a bit of a semi-frenzy.
Yes,
so it seems like we're all moving, which is quite unusual. So,
yeah, exactly. Some more than others, but definitely.
I have bought local, but I'm definitely not adverse to looking elsewhere in the future.
And what about sort of the units, houses, debate that's sort of been sort of thrust into the limelight over the past 12 months, and with the houses sort of emerging as the winners given COVID, given lockdowns, people do like to have that little bit of land as well. So what's your sort of preference? Have you sort of mostly gone for houses, I imagine, in Perth, being so spread out?
Yeah, well, land is what goes up in value. So I would avoid possibly, this isn't the blanket rule either. This is just my personal rule. So I have bought units or flats or whatever you want to call them, I would look at more boutique style developments or older style properties where you have a large allotment of land and maybe only a dozen units or apartments on it. Where if you have a high rise, it's a small land footprint and a lot of properties. So essentially, if you have 100 properties in a high rise building, you own 1/100th of the land. If you buy in a older suburb, say, for example, block of flats of 12 or 16, they're usually on a large piece of land. So if you've got 12 units on a large piece of land, you own 1/12 of that land, technically speaking.
Exactly, that's true.
Like if you are going to go units or apartments, I sort of steer people or put that idea out there, in saying that I'm sure there's some high-rise developments that have done okay. It's not really such a big thing in Perth. It is becoming more common. I know it's more common over in the eastern states, particularly in Sydney. So I always look at land is what goes up in value. So if you can get something, a higher land footprint to building ratio, that's always a good thing, whether that's an apartment or whether that's just a standalone dwelling. Also with land, often you can do creative things with it. You can subdivide. You can subdivide the land, sell the land off, help it to reduce the debt on the other property, or dump it in an offset account. You can subdivide and build another property and hold onto that and rent it out. So different strategies, different strokes for different folks, depends on what their particular situation is. But that's why we collect the fact find, and we can get a snapshot of where they're at and run the numbers for them and let them know what's possible. So houses versus apartments, like the mentor I mentioned, actually another mentor that I had, he said, buy what you can afford. So if you can afford a one better or a, what do they call them? Bed set. Studio, that's it. If you can buy a studio, buy a studio. just make sure it's over 40 square metres, preferably 45 in a lot of the markets. Sometimes difficult to finance. And if you can buy one better, buy one better. If you can buy two better, three better, four better, so on. So buy what you can afford.
Yeah, exactly.
Yeah, really, to start off with. But if you can, like you say, if you can afford to get a 4x2 in the suburbs on a nice piece of land, grab it. If you can only afford a 1x1, grab that as well.
And I think there's a lot of interstate buyer interest in Perth at the moment. I know I have a few colleagues that have recently sort of purchased investment properties in Perth just because prices compared to Sydney are still sort of pretty relatively lower. But Perth is growing quite sort of rapidly. So it's turning out to sort of be a good investment option for interstate buyers. Are you seeing that sort of in the market? Are people interstate sort of coming into Perth and purchasing local properties?
Yeah, there is a definite interest. Perth's median price at the moment is about just over 500K, and Sydney's is, I think, around 1.3 million.
Yeah.
So back not so long ago, I think it was around 2014 or 15, the Sydney median price and the Perth median price were on parity. They were equal.
Oh, really?
Yes, just for a short, brief time there.
Why wasn't I born earlier?
Now the gap is quite substantial. So whether we'll meet in the middle or it's anyone's guess, I don't have a crystal ball, but I think there's room there for us to catch up. That's not investing advice or anything. It's just my personal opinion. So I think the gap's going to close. Now, as long as people have a reason to come to Perth, and there seems to be a reason for people to be here because of the rental increase indicates that there's good population growth. So as long as people want to come to Perth, which is, I know a lot of it's tied to mining, and that's looking like it's having a good future because I've got clients that work in mining and I've had discussions with them and they say things are looking good and going good. So I think Perth's going to have a good 10-year run all around. So
that's good. At the moment, I know even just with rentals, it's just the market is so tight. It's quite hard to sort of find, which means that the properties are yielding really well. Is that sort of what you're seeing with your properties? Are you renting at the moment any of them or?
Yeah, I'm renting them all out and I had one property it was a 3x2 rear property on a little sublot development I did. That was getting 380. That went up to 450. There's another one at the front getting 320 and that's going to go up to 370. So what's that? That's about a 10 to 15% rental increase.
That's good. Yeah.
So that's pretty normal across the board. And I think there might be a little bit more growth with the rental returns to come.
And do you expect that to sort of continue, or do you expect that there will at some point be a dip maybe when?
Oh no, there's always a tipping point. There's always a point where it hits. What often happens, people, when rent increases, it's going to be an interesting time because as rent increases, interest rates are so low, people are going to start thinking, well, I can actually go and buy a property for the same as renting or less. So the more and more people catch on to that, then that could add even further pressure to the market. So, and that's normally how it happens. People think, okay, so for what I'm renting, I can go buy now. So then they get a deposit, so they go and buy, and that cycle repeats itself. So we will hit a ceiling where there'll be the market sets the rate. But then there's new legislation that's coming in around rental properties that I haven't looked into it too much because the WA hasn't been affected. But I know, I think it was Queensland and possibly New South Wales.
Victoria,
they brought in new legislation which even favours the tenants even more. And they were talking about limiting rental increases and that sort of thing. So it's
going to be interesting for investors.
Look, I think it's best if the government stays out and let the market decide. The government love to chuck in their 2 cents.
Things.
Sometimes it works, sometimes it doesn't. So.
That's true. That's true. And just tell me, to finish things off, Colin, tell me sort of your future plans. So obviously this first commercial property and then, what's on the radar for you? Do you sort of see going down that, if that works out with commercial property, would you like to expand your presence there or maybe interstate or?
Yeah. Oh, look, I'll be happy if I could get another commercial property and one more cash flow positive residential property within my SMSF. And then I'll just focus on building my business up and maybe I'll learn about the currency trading as well. My girlfriend gets up to speed on it, so she's pretty good at that stuff. Yeah, so that's my future plans. Maybe just get a couple more. I mean, I'm not getting any younger. Time's marching on, and that'll be enough to have a good foundational financial future for my winter years. So so I'm just happy just to have enough money and look after myself well and feed my kids and make sure they're well looked after and hopefully leave something for them in the form of a legacy.
Yeah, that's good.
Both in tangible assets and, more importantly, mindset and how you think.
About money, yeah, that's a good point. And are you sort of, when you got started in property investing, was early retirement ever sort of a goal for you? I know you obviously run your own business, so you probably enjoy doing that. Is early retirement on the radar at all, or no?
Well, to me, retirement just simply means doing what you want with your time. So, yeah, I can get back to a good position, strong position within 5 years. So, yeah, like I say, money is just a tool. You need it. And it can solve a lot of problems that otherwise would exponentially turn into greater problems as well. So a lot of people have fear around it. And really that's the number one issue or number one thing you need to address is your mindset and the limiting beliefs that you've been given around money basically from a small child. So because it comes through comments that you hear and the way that your parents handled money. And unfortunately, there's no real subjects in school to teach us how to manage our money wisely, which is a bit unusual.
Yes, it is.
Seems almost deliberate, like the powers that be want people to be ignorant. But these days you've got no excuse because all the information's out there. It's just whether you have the motivation and desire to learn what you need to learn and put that into application.
Exactly. Well, thank you so much for joining me today, Colin. It was a real pleasure listening to your story.
Thank you, Maya. I appreciate the opportunity.
Yeah, and all the best in the future, and definitely get in touch with us once you do buy that commercial property. We'd love to sort of know the ins and outs of using an SMSF for commercial purchases.
Yeah, I will, definitely, for sure. Love to share about that.
Yeah, looking forward to it. And thank you to our audience for tuning in today. If you would like to write to me or to Phil, please write to us at editor@smartpropertyinvestment.com.au. We hope you enjoyed today's show, and we'll see you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance and no cap on existing investment portfolio size. Plus personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.